Hey, hello. This is Martin from Secret, a channel for learning about trading and investing. Welcome to the weekly stock market analysis, where we look at technical charts and try to understand what happened in the markets during the last week, and then try to plan for a better trade for the next year, next week, next month, January 1st, tomorrow, Monday, 2024. Before proceeding further, wish you all a happy New Year. All the best wishes for the upcoming week. If you're not subscribed, to subscribe and share to friends so that it reaches out to max. Right, so here we go. Let's look at the charts of what exactly happened. Look at that. It's a rounding pattern, cup and handle, flag pattern 1, flag pattern 2, flag pattern 3. Same repeats on the Banknifty on the right side. Weekly charts there. So breakout after breakout. We are in the midst of a mega rally, bull rally. This is another view, well contained within the trend line channel on both indices, and at the very top with a weekly candle that is absolutely bullish. Daily trending up without major correction, vertical up now seen on the daily charts. Here we go, candlestick patterns. Look at that candlestick, absolute wide range bullish. Banknifty right side, absolute wide range bullish. The reason why this is the third breakout is because the previous week was a spin bar on the Nifty and a hammer kind of bearish candle on the Banknifty, both indicating consolidation. But this previous week that went by was the last week of the last month of the year, and when people expect Fyers to be not working around holidays mostly, Fyers did buy big time, and the market broke out the third time in the December month, and November and December month candles alone is made a big blast at the end of the year. That's exactly what has happened. So weekly candles, daily candles, look at this. So daily, after doing that 3 days triangular week that last week was, and after the Christmas, a 3 days up move, the last day, the Friday, was an indecisive dodging, which is an inside bar as well, which indicates some consolidation on the short term. And again, it's a spinning top, the indecisive small body candle. It is also forming an evening star pattern, which is bearish in nature. So short term, small bearishness has formed on Banknifty, especially Nifty as well, with an indecisiveness. Right. Probably some correction will come in. It was only a 3% less than that correction that has came in this big mega rally that started near the 20,000s, and now we're talking about 22, which is kissing distance away, right? That's a kind of rally that we're talking about. But finally close on both indices, a kind of small pause or red, but so was last week. The candles was a small pause that happened, which indicated consolidation, but again broke out. So you never know what happens. All the bands are showing that it is the expansion has halted temporarily, and there is a beginning of a consolidation. The Nifty and a definite consolidation has started on the Banknifty, but with a far distance away from the exponential moving, from the median 20 moving average, which is the median, which indicates that there is more probability that it can get attracted towards that. So all the bands on the daily indicates that both indices are heading for some kind of consolidation, right? With more indicative of that in the Banknifty. Before getting to see the levels, let's just wrap up what happened in the numbers. So it was another breakout that happened. It was during the last days of trading. It was making all-time highs on both indices, after giving indication of some kind of consolidation the previous week. It never happened, and market broke out 1.77, 379 points a week. That means it's nearly 3,000 points, 15.7%, from the previous swing low. And it formed by a bullish candle. We've already seen that it's breaking out, it's made of a rally. Banknifty 1.7%, 810 points in last week. That's 6,500 plus points, 15.5% of up movements from previous swing low itself. And it's still made in the 20 weekly exponential moving average, made of a rally of breaking out of multiple flag patterns. That's where we are. So the short term, as you indicated, it's a flattish close with a small body indice candle of 0.22%, 47 points down, and 216, that's less than half a percent down in the Banknifty. Banknifty forming a spinning top instead of a disk. It's more or less indecisive as long as somebody is small. So it's also forming an evening star, which makes it even more bearish in the short term. Right, in the very, very short term. That's what we're talking about. After vertical rally. So if you went out to hit multiple highs, even to the last weekend, now it is expecting that, and less correction has come in so far, right, in this whole rally, of 15.5% up. So all the bands we already seen that. Let's kind of see the levels. Now that it is already broken out the 78.6 Fibonacci extension, it's probably some more. 22,000 is the first resistance to the upside, right? Now it is at 21, near 2 points away from the 21,800. So 21,800 can be a resistance there because now in number 21,900 can be resistance. So all get covered in the gap up. But 22K is the big rounding number that they could have seen there because of various players betting on that big rounding number. So after 22,000, probably it may go another 200 trainer, and then it ends the Fibonacci extension completely, and then that may be the time when retracement can come in. You don't know how big it is, but it was another breakout that you have seen, the third breakout in the month of December last week, and right. So the resistances are clear. Downside, there's a gap there at 21,730, so that could 21,700 could act as some support. 21,675 actually, it's a gap, and then there is a gap at 21,500 nearby, 21,477 to be precise, and then if that is breached, 21,125 would be the next support. So that's a major support because there's some amount of pullback, and then that's near to 21,000 rounding number as well, and Fibonacci 23.6 retracement and 61.8 Fibonacci extension level. So that sort of 21,000 is going to be very good support. So that's breached, then we go to 2,702. That's where the next gap support is, and it's very close to 38 point and retracement level of Fibonacci and 50% extension level, and also 50 exponential moving average. But that comes in at 2,500. So 21,700 also is breached. 2,500 is the next level. Look out, right? Likewise, next support after that will be 2,300, and then 20,000 rounding number. Hope it doesn't correct that much. Banknifty, the first resistance would be to 48,600 level, with all-time highs in there. And after that is the 49K, the major resistance is there. So once it hits the 49K along with 22K on the Nifty, that may be the time when corrections can come in, or it may consume some more time before it's taken out, right? So supports could come in at 48K if that 48,500 is surrounding numbers, please. 48K can support, and then 47,200 as a major 20 more exponential moving average, and Fibonacci 23.6 and a 61 Fibonacci extension level. So that's 47,200 and 47,000 will going to be a very good confluence of supports economics. That's based on 46,500 is the next gap support. It's there. 50 exponential moving average will come in at 46,000 nearby, sounds along with Fibonacci 38.2 retracement and this extension of 50% on the Fibonacci as well. So 46,000 would be the decent enough, more than decent enough, very simple correction that can come in. Right, but before that, all these levels that we mentioned above has to be breached. So that's Banknifty, supports and resistance levels. Let's move on and see the momentum in the trend indicators, some Nifty and Banknifty. So left side we have the weekly charts, right side Bank daily. So it's rising up, momentum, trending, absolute rising up, and there was divergence there, bullish in nature, and this met its target basically on the short term for the biases. So that's weekly. So weekly up and rising. Short term, momentum is absolute bullish, no doubt about that. But slight dip has happened last week, right? So momentum is bullish and slightly falling on short term on both indices, and rising and bullish in the medium term. Nothing, it's intact bullish. Trend is bullish on both as per the ADX indicators and DMI zones, and there is some flattish move on Nifty and some falling bullishness is there on the Banknifty, but otherwise medium term bullishness is rising up only. So absolute bullish trend and momentum. Let's move and see the volatility and the operating stance. Volatility, the India weeks is a measure of the fear and greed in the market, how much likely of movement of them. So last week, in spite of the fact that the market was making new all-time highs, markets VIX spiked up 5.6 and in fact finally hit the 16 levels almost. Finally closed at 40.5. That's a 5% more, which is kind of indicates that there is a lot of fear of heights that's there in the people. Right? People are, so market is expecting that there can be a correction that can come in any time. So that's why the market is. So this, when it happens, you have to be extremely cautious. No? But market has not gone and hit the 20 and climbed above that. So it's still in the low volatility regime, but slowly shifting to the higher, to the medium volatility regime is what I would understand. So once it is 20, you have to be extremely cautious. But even now, if it is not calling off, then that means there has to be some big fall that can be expected. So you have to be cautious. Also, the implied volatility, the realized volatility difference spread, if you see, it's 26%. It's in favor of the sellers, but not that much, right? It's in the mid-range, the difference. So, it should be fine. Open interest is the next one. Open interest of showing short covering is very powerful. People are short, are now covering and going taking long positions. That can make big breakouts. So open interest on the options for the next weekly expiry of Jan 3rd and Banknifty and Bank 4 and Nifty is indicated that there is short covering built up, which is bullish in nature. But the put call ratio is not that great. 0.93 is not bullish enough, but above 1 it's bullish. So 0.8 is not bullish enough. So put call ratio is not that bullish enough, neither is it bearish. But futures open interest is short covering build up, that's bullish in nature. So overall, you can say it's more or less bullish, not bearish in nature at all. Understanding the futures open interest and the options open interest for the next weekly expiry. I suppose VIX is something that we have to be careful about. That's about volatility in open interest. Now, so this is a level that it shows for the option writers applies the bet on the indices. Nifty 21,500 is where the highest put writing is in, and 22,000 is where the highest call writing is. Resistance can be expected there, 20,000. So second highest put and call writing is in at 71,700 and 22,500. So Banknifty 26. So very tight narrow range you can say in Nifty, but in Banknifty 46,000 is where the highest put writing is there, but highest call writing is at 51,000. That's quite far. 1,500 plus 5. So wide range there. So second highest put and call writing is seen as 48,000 and 48,500. Very narrow range there. Right. So people expect the Banknifty probably may be more volatile for the next week. Right. That's why the wider range of betting on the puts and calls are seen on the options for the next expiry. It's coming. Now that we already seen all that, let's see how the different industry sectors have performed. Last week it was down only on the IT sector, that too flattish down, 0.3% only down, and it's kind of industry Nifty. IT had broken out of the major gap resistance and then it maintains the bullishness with respect to the moment of the medium term and the short term both. So fortunes could well be taken absolute bullishness, but that is only sector that is wrong. Otherwise, look at this: metal 4.4% up, auto 4.9% up, pharma 2.6% up, FMCG 3.4% up, reality 2.5% up. It's quite a long time since we have seen such kind of bullish performance across all of these sectors. Absolute bullishness, no doubt about that. Positions could well be taken because momentum. Short-term, medium, absolute bullish, rising up, and most of them have divergences. Most of them have all-time highs. So that's what. Look at this chart. It indicates that IT was stuck at this gap and has taken out that absolute bullish, trend bullish. There is an inverted head and shoulder pattern. Metal broken out of that, confirmed bullishness with the momentum and the trend. Auto sector all-time highs, hit the top of the channel. Some concerns come in, but absolute momentum bullishness in the medium term. Nifty Pharma all-time highs, absolute bullish in momentum and trend, and broken out of that, flat pattern. FMCG top of the channel, all-time highs, absolute bullish momentum rising, short-term and medium term. Trade and Nifty reality is some more space left towards the still the all-time high, some more space towards the top of the channel, absolute bullish momentum and trend. Now that we've seen the different industry sectors measure, now we will analyze the major heavyweight stocks that contribute maximum to the index. Here comes the HDFC, the most contributing, and you are seeing that it is at the very end of the top of that consolidation rectangular box, and a breakout from here, from a stock that contributes maximum to the index, can skyrocket, make the index skyrocket towards 25,000 just like that if it happens. But because it's at consolidations on top, channel top, anything would happen. But look at the volumes, big volume buyings having HDFC Bank is gained more than 18, more than 15% for sure from the bottom. Absolute bullish momentum on HDFC Bank. Reliance, absolute bullish momentum on, with volumes breaking out, a candle formed outside of that consolidation, similar to the HDFC breakout from here. These two can take the index to anything, if it all happens. But it's at a crucial point, both with respect to the breakout. So neither is it confirmed, and it looks like high probability it can happen, anything will happen on both sides. IGC Bank similar after some retracement at a small space towards the top. Big volumes, momentum range shift has happened, bullish in nature, trend absolute bullish, and looks like it may consolidate before going and hitting it. Another all-time high on the top of the channel is what is likely, but momentum back to bullish. All the three major contributors to the index are an absolute bullish momentum on the medium-term weekly charts. IDs, Infy and TCS had some posture last week, but remember that it has made a range shift and it's almost making that TCS Infy is making a range shift with absolute bullish momentum. So it is confirming the bullishness by taking a support of the other side 40 after moving up from the sideways and confirming its position in the bullish zone. So the breakout from here would have a major hurdle of the gap resistance that's there, which is coming at 1750. Really questions about that. Once that is breaking out, absolutely it can move big time to all-time highs. Later, consumer services is consolidating and forms some kind of flaggish pattern with good volumes, range shift momentum, and then absolute bullish trend indicator ADX also. So there are only two stocks which paused last week, but otherwise they are also in bullish momentum on the medium term. Bang, momentum bullish, trend bullish, volumes. But it has been range mode moving for so many years now and may continue to go at least to 2000 given the momentum. IDC after a small pause or consolidation is trying to break out that flag pattern. If it happens, it can go another 400 points also. Volumes are less, but momentum is absolutely bullish also. All the heavyweights, all these industry and major sectors, they are all in bullish momentum on the medium term and short term. Absolutely. Not over that. Now, why did this happen? It's just because of the foreign institutional players. Look at this, 8,650 crores in the last week of the year, the December end, where almost all historically Fyers were on holidays. There will be lack of volumes, but this is what happened. They're working from home, and then big buying happened from their Fyers, and that's why it's a fourth of so that's buying, and ignore this last part of it. So domestic institutions also bought small. They were selling a little bit. So net longs are moving up the derivatives from the Fyers and the AI side also. Look at this. If you look at the FNO, FIs are bullish on the index futures, index options, and property desk are bullish on futures, slightly bearish on the options. But FIs are bullish means market follows that. But the brokers are also bullish, retail also is bullish. So absolute bullishness is there with respect to institutional participation, which is very positive. Now we are getting into analyzing the global markets, global commodities, and the currency. Currency, dollar has closed less than 0.5% down, 0.33% down. That's after a 6.25% dip from the high, and it's about 1.37. It has slipped into the bearish momentum on the weekly charts. This is good. Dollar is cooling off, is good, but rupee is not getting that much. It's slightly 0.10% moved up, 83.7 rupees. It's still at the weakest points. Crude oil is 3% down, further down. It has been falling down almost 29% from the high, and it's further going down. Right, so just going and hitting 70s level once again. Remember, it slipped below the 71s. So oil is absolutely in the bear zone. So this is good news for oil importing company like from the economy perspective. Gold is heading once again towards the all-time highs, 21,455, 21,45. Once again, it's going to hit after the initial up move of around 18% and hitting making all-time high. Some profit booking and resistance came in and then immediately got sold off, and then it's coming back. It was consolidating and now it has climbed from the sideways sell-off and now into the bullish zones. So gold is a hedge instrument. Remember that. So it's good that hedge instrument prices going up at the same time the market is also moving up, which does not happen very often. No, most of the time it's the other way. So that's good for investors or traders as well. Right? When you have hedging instruments gold rising up. So that's a summary. Before that, let's get in one more thing is left is the global market. So mother market, the US markets, Dow Jones indicator, Nasdaq and S&P 500 is what we analyzed. Dow Jones all-time highs. Absolute 8 weeks of bullish momentum, and we have 8 weeks of green candle even on the holiday week last week. Right? US markets are as crazy as ours. Nasdaq also gone and hit new all-time high. Right, with 8 weeks of move, momentum is bullish, trend is bullish. Since S&P 500 not really hit the all-time high yet, but a small distance, but still, so overall it's flat greenish close on all the views and dice, I can say, flat green, but with bullish momentum. That's what it's about. So US markets are green, crude oil is falling, currency, dollar is cooling off, currency somewhat okay, remaining at the same level. So no major bad news there from the global cues. It's all positive, and that's why the market is shooting up. Let's get into some action now that we have done a lot of analysis. 2 stock picks: Metal Stock Steel Authority of India. Say, look at those volumes, absolute above the moving average, 1M moving average, about that trend, bullish, momentum bullish on the weekly charts. Confirmation of a consolidation breakout. Right, trend is reversing, rounding from pattern negative formed. So target of 115 is easily coming. But put tight stop losses since the market has run up a lot. United Breweries, happy times and festive times and seasons, season of festive celebrations and all that. So obviously spirits will move up, and that's what is happening. Momentum relationship mounts is what you can see, rounding pattern within ascending head wedge. Around a breakout if it's confirmed. Entry is not confirmed. Entry is if this all-time high is breached. If that is breached, then we can easily give a risk reward of at least 1:2. Right. So 2 good stock opportunities for the new year. Steel Authority of India on the long side, and United Breweries also on the long side. Absolute bullishness and with volumes, momentum and trend is what the reasons why you're taking that. But have tight stop losses and all as indicated on the picture here. Another actionable on the weekly options trading. We have a Batman strategy once again for the next week. Completely hedged. We know what we lose. RiskReward is good if you are exiting before the expiry, and profit is good, right? And yeah, it's a net credit strategy where your very less margin is completely huge. Basically, you are selling OTMs on both sides, call and put, and then inside selling, inside hedging with buying on put and call side, and then taking an outside hedge, to completely cover the hedges for OTMs on put and call side. So basically it becomes a call. So you will have a steady profit in the mid range, and when the market make violent moves inside and still maintaining the range, then you have bigger profits. But if it's breaching, you'll have to roll up this entire leg, the sell to 2 buys. Basically you are try selling and more than the buy. And whatever inside hedge you're buying, double of that you have to sell. That's what Batman strategy is all about. So that's the weekly options strategy for the next week. Hope it helps. Now that we have learned a lot, let's just wrap up things. Market did drop out unexpected and made new all-time highs in the last week of the year when it was least expected, and it's at the very top of the trend line channel. And still no major corrections have come in the latter December, and November and December have been terrifically moving up without major corrections. So it's at 26 and 29% of correction that is coming, while it is breaking out of the common handles in multiple flat patterns. Now the green US market since several weeks, so actually it's 8 weeks, over the trend indicator in the bull zones, big buying coming in even the last week, low wicks regime still maintained, not at 20, all the sectors and all the heavyweights up move. All-time highs are made every day. This all gives hopes for the bulls that this might just be the beginning. It can be an even bigger rally that may be coming in. But how about the bears? What do you think? The VIX is not holding off despite the market is moving up 8 to 10%. VIX is spiking up like anything, 50% in 5 months. Open interest is not bullish enough, less than 1, both for weekly expiries. Fibonacci's daily charts show price at the very top of the trend line channel, greater than Fibonacci's 78 extension levels. Small demand is indicating some contraction beginning on the Nifty and confirmed contraction on the Banknifty. All this gives hope for the bears that this is time for retracement. It can come in any time. That's what I think. Now, markets have continued breakouts, making new all-time highs even at the end of the year without major corrections. It's coming. So the big question after such vertical moves is that when are the bulls going to get trapped? How big is going to be the correction? Is it going to be consolidation before that? How violent the consolidations can be in all this, right? So it's very close to the peak rounding numbers. We cannot say whether it will happen in the initial days of next week. There's a possibility that it can go and hit the 22K, or it can go further a little more up towards the completion of the Fibonacci extends to 100%, and then at 22,300 it can, or at 22 itself, or before hitting the 22 it may need some more time to consolidate and break that, and then so 22K may be taken out because of the fact that it's very close, and 49K similar in the Banknifty. In fact, the open interest is showing that it's a 51K replace the bets on the calls. So the direction is very clear, but there may be correction that can come in any time, now, no way. But it is due. It is due since several weeks, and it has to come in any time. Small or big is only the question. So technical charts are bullish, but I still have a mild consolidation or a neutral view for the next week, mid next week, the very short term. Mild bearishness is what I think of, although the market is absolutely bullish and heading up. So all this Russian fears, interest rate hikes, war order, all this can create black swan events, and you have to be prepared for that. Only way to prepare yourself is your hedge it properly. You don't have any portions at all. Absolutely hedge. Right? And I was looking for 21,000 and 22,000 is 1,000 point range. That you can look out for the next week. 46,500 and 49,000. That's a little more wider on the Banknifty indices level. So as long as it's 21,000 and 41,000 levels are kept and maintained in the indices, things should be fine. Right? By consolidating, then rally may continue. The IV to RV, the implied volatility, the VIX, what it indicates, and the actual realized volatility. This difference is not that greatly in favor, but okay. Still officials will make money at this point. But I will be cautious. The VIX is going and hitting 20, extremely cautious. Now the implied volatility percentage also is above 86-90 level. So the cool-off can come in any time, and then that may be the time where the DK benefits come in for the option sellers. Now, yeah, so don't have overnight positions without hedging. Right? Use non-directions, go for direction strategies because the direction is very clear. Right? Go for spreads, direction spreads is what you can do. Non-directional, it's very difficult if the market corrects violently or moves up. When the market is in trending nature, it's very difficult. This may be time with option buyers can make money with type stop losses on intraday basis, basically. Right? So. We can use options. This may be time for investors to put in money on momentum investing, not on value investing. For value investing, opportunities may come in when the tips come in. That's the time we'll let it buy. Right. Just for the traders, direction is very clear. As I said, but don't take overnight risk without hedging. Have hedged non-directional risk right strategies, and also you can use option strategies. Check out the playlist for details where you can make rental income. The market is regardless of market moves with option. Which side, you can get rental income by using option strategies like covered calls and cash circuit puts. Check out the playlist for that. So that's all I have. So if you're not subscribed and share watching this, please subscribe and share to friends and reach out to Max. Please put in your comments, feedback so I can improve the comment. Also, we are posting regularly on Twitter and other social media channels. Intraday, during the day, a lot of posts are coming in, maybe technical in nature, and then it may be very useful for intraday trading as well as positional tradings, stock picks and all that. For education purposes, put it there. So check out that, and then subscribe to those as well. That's all I have. So happy New Year once again, and then have a wonderful trading and wonderful investing for the 2024. That's all I have. Bye bye. Thanks for watching.